All right, all right. Good morning, traders. Happy Monday. It's cold and snowy out here in Utah. We're going to give it just a minute or two to let everybody get in, get their audio connected. Good morning, Perry. Good morning, Eric. Welcome, welcome. Glad to have you. Good morning, Bob. 31 with a little snow. I got my daughter home on Saturday. There was a window. She's only 2 hours north. She's back up at school at Utah State. But my son has to make the drive to Billings. He goes to Montana State in Billings. And so I think I found a window. He's leaving later this morning. Little sketchy winter driving. Anyways. All right. Yeah, we got a great group here. Welcome, welcome, everybody. You're welcome, Michael. If you didn't see, I sent out a follow-up email yesterday. So if anybody didn't get it, then let me know now. But there was instructions for the link and the instructions for Discord. Get on there and get comfortable with it now, because that's what we're going to use when we start the alerts and are pushing trades. So make sure that you're comfortable with that mechanism of communication. Good morning, Stephen. Good to see you. And as well as the posture that we created yesterday. We're going to talk about that in just a second. Anyway, so let's dive in. Welcome to the Market Watch Group weekly opening bell. As always, I am Scott. Here are the disclaimers. What does my tag look like? Oh, I don't think I have it. Is that on the Discord? I probably should get into that and get my tag and things going. I always make my son help me. With him leaving today, my Discord troubleshooter is going to be further away. I'll have to come up with something good. There's the disclaimers. Here's the agenda, opening futures and news. Okay, we talked about Boeing and the impact. Did anyone take a look? My guess was 8 to 10%. It's down about 8. I've got a pretty good read on that. If you're looking at the airline, so the question came in, what kind of impact would it have on the airlines? I just briefly looked at Delta and American. No impact. They were both up in the morning. The Dow is a little bit weighed down by the Boeing impact. We'll take a look at that in just a second. We'll look at the economic calendar for this week and our market posture to help set the tone for what we're expecting. Mindset for any open trades. It doesn't seem like there's a lot of open trades right now. As I went through, not many people were talking about it. So real quickly, if you're hesitating to take trades, now if you're deliberately not taking trades because of concern you have with something showing up in the market, we are still bullish, but our score did drop a little. Of course, last week when you have the type of week that we did, you can't expect a real-time scoring process like we do, assessing various components of the market, not to react to that. Of course it's going to react to that. The question is, how much did it react? And then what kind of an impact? Well, for me, my score dropped marginally. Not enough for me to be like, oh, yeah, that's problematic. At the same time, I did get a half of a hedge on because of something from the VIX, and the VIX is still potentially setting up for something more than that. And so that's something that's very much on my mind. This is not uncommon where I'm thinking, look, the window that's opening is for bullish trades, but here's the concern and what would cause me to need to adapt quickly to a changing condition. We'll watch the opening range this morning. Think about what the trade implications are. It's an important one, I think, because we do have a number of trades setups. Paul says from what he's seen, United and Alaskan. Oh, yeah. Well, those, you know what, Paul? It's funny that you say that. I didn't look at those two symbols, but as I read some news this morning, I mean, obviously, Alaska is the one that had the side of the plane blowout. But those are the two with the most cancellations due to grounding the, what is it, the 737 Maxes or something. Anyways, that's a good call out because I did see that those were the ones that seemed to have the heaviest amount of impact. Okay, well, we do have a great number of we do have a great number of setups across all of our sectors that we're watching. We have some in tech, we have some in financials, some in industrials, communication services, consumer Amazon, consumer discretionary. So we'll look at that, and then we are now moving on to market forecasting. That's our section of the week. So spending at least my request is this: 20 minutes a day, 3 days in the week. That you specifically, this is on your New Year's resolution, 20 minutes a day, 3 days a week that you spend on whatever trading plan section we're working on, so that you're giving it at least an hour. You'll be amazed what you come up with on your first, even if it's your first pass. And then their second pass is when it really starts to come together, because now you've traded, you've thought about it, you've seen some things, you've tried to implement based on the plan that you're developing, and you realize where its shortcomings are, where it needs to be fleshed out a little bit more. That this is the year of the trading plan for us. Okay, let's dive into it. So you can see the futures are stable. We dipped negatively, but we've recovered to the point that now the S&P is set to open 0.03. The Dow is down 0.37. It's not terrible, but certainly it's being impacted. The NASDAQ set to open 0.13, Russell down 0.2. Oil is reacting to Saudi price cuts, and it is down 4%. So I told you that I took a little stab at oil, and it reversed pretty quickly on me. Okay. It is what it is. What else? What else for the news? That's really about it. Obviously, the big news is Boeing, and then followed by oil. Other than that, and that's very localized. It's not broad based that it's the market's reacting negatively. Excuse me, still fighting just a little bit of that cold. Feeling much better though. Okay. What's on the calendar this week? We give it up to this week. Consumer credit. It's not significant like, oh, we're in such bad trouble, but you can see consumer credit is projected to go much higher. So there does seem to be some credit spending, and Lord knows Americans love credit. Trade deficit, not much really there that we care about. Wholesale inventory, same thing. Really, it's Thursday and Friday. We've got inflationary data. Now, with everything that we've been seeing, that indicates strength. And in this case, the market reacts somewhat negatively to strength because they think, oh, the stronger we see economic factors, the longer the Fed is going to wait to start the cuts. As soon as we are convinced that they're done cutting, we start asking, or done hiking, we're asking for cuts. And that's exactly what's happened. So a lot of what we're seeing is just sort of the market dialing in their expectations for whether it's going to be the second meeting of the year or the third meeting of the year. There's really no expectations for a cut this next meeting, which is coming up here in a few weeks. So the thing that can help balance, right, that it can help balance when the market sees that strength is when we see the inflation continue to support the ability for the Fed to say it's under control. We can go ahead and ease a little bit to make sure that we don't now stifle the growth that's stifle what's there. So, okay. We have 4 minutes until market open. Here is Boeing. You can see on yesterday's meeting, we are taking a peek up here. If you ever notice, when you're looking at your charts, this is giving you the pre-market information. The pre-market trading has been going on for almost an hour and a half. Pre-market session starts at 8 a.m. This is where the limits are being set right now for Boeing, down at 227. So we're going to open up down about here. So this is what we're looking for, is this little guy to come floating down here. Press asked, can we get puts? Unfortunately, like I said, it's already fallen. And so much the market makers are going to be pricing in significantly this gap. So the option prices will reflect this plus more. And so the risk is that it opens and everyone's like, we overreacted, and it goes like that. So anyone who buys puts on the open, right, that could be trouble. Could it open and then continue to fall? And let me see if I can just back that out and go the other way and give us something like this. Yeah, that could happen, but it's the other thing that's going to happen is the implied volatility is going to spike up into this area. The market makers price these expectations in. If it's going to be harder for them, they're going to preemptively add the cost of options until they can get a sense as orders come in, right? So that first 20 minutes, it's so overinflated with them just putting padding in until they can see the order flow and be like, okay, yeah, we've got this now. Anything they can do to prevent them getting on the wrong side of a trade is going to happen. And so we just have to understand that puts us at a significant disadvantage when things like this happen. So essentially, we weren't doing something. And I'll tell you what, breathe. I don't know about you guys, but I was breathing a little sigh of relief because Boeing was one that I'm like, oh, this is giving a signal here. Prior to news, with no news, this was just on a straight trajectory. It had a little bit of a consolidation. I don't think that was a correction. And then it was starting to turn, and the signals were looking absolutely like what we tend to look for. This is where the news can just throw everything off. With obviously, you're not going to see that news on the charts. Boeing was rushing the normal production schedule, which caused the software now. Okay. So if you had a little bit of insight into the company, that might be useful. Now what for Boeing? Now I'm a spectator. Now I'm going to watch, and there you can see it. It actually opened right there where I started my line. Let me back everything out. There it is. And now, like we said, we can watch and see, and you'll notice already, even the first few minutes, it goes up a little, down a little bit. Now, like I said, look at your vol. You see how your vol spiked? That vol spiked up. That's the market makers just throwing some padding in as they start processing this. The options are insane. Down 8.5%. Okay. Let's take a look at the market itself. If I can get a hold of my keyboard. You will not see the news on AI either, Steven said. 100% right. Right? 100% right. Okay, so the markets themselves, how are we processing it? Up about 0.15. Let's look at this a little bit closer. Okay. Don't think, don't feel, don't believe. I want you to see. Just see. See the chart. What do you see here? What do you see for a trend? What do you see for supply and demand, buyers and sellers? Who's in control? What's been happening? Right? What I see is an uptrend. What I see is most recently we hit a higher high. That's up here. What I see is we now seem to be establishing a higher low. Now, like I said, this area here, it's gray area for me. Some people could say, well, that's a low, and now we're a little lower than that. But for me, with that being one day followed by just a few more days higher, I interpret that as being this ended up being just the tail end of this run here, just one last little gasp. Okay. That's what I see happening there. So I still see the prospects for a trend that looks like this, which would mean this would be the next move. I see my stochastics in a great setup position and actually starting to turn. So these are the things that I see happening. Now, it's a long day. I'm not going to make any judgments this early. Obviously, I want to see at least the first 20 minutes before anything else. I'm not going to be like, let's hurry and jump in because, and I've done that before. Sometimes it works. And sometimes by the end of the day, it looks like this. And and at the end of the day, you're thinking, why did I put that trade on? It invalidates it. So now our market posture, for anyone who wasn't there or didn't get to see the video, did decrease this week by a half a point. Where did that half a point come from? Came from volume. And we've been talking about volume and how it's almost impossible for it not to eventually drop when you're in a strong market because we acclimate. We don't need buyers to continually ramp up and break out. It doesn't need to break out. It's already broken out. It's already trending. So what happens then is it sets up so that we start to see if the volume indicates something is happening the other way. I actually prefer that because as the volume drops and hits down to a quarter or even to zero, then all of a sudden, if it ever dips negative, that's an extra little, whoa, hold on a second, right? Now all of a sudden, the buyers maybe got complacent, whether it's just the start of a 10% correction and we ease up on our trading to make sure it doesn't hurt us, or if it turns into the next bear market. We never know in advance, obviously, but that becomes a great mechanism to indicate when the buyers are trying to make a run at things, or excuse me, the sellers are trying to make a run at things. Thank you, Eric, for flagging. I will check and make sure that I have you on the list. No problem. That will come out today. And I might even have to send you something directly. So if I, rather than resend the whole email, if it just was that you were off, I'm just going to send you that information directly. Okay. What else? The trending, the long-term trend, the short-term trend stayed great. No problem. Volume dipped. Major market. There was a little bit of like, there was some back and forth. A lot of strength from the small caps, though, and that's what's really pushed this score into that area. But nothing that changed for me. Same thing with sector rotation. Now, a couple people have said, yep, I'm going to change mine a little bit. So some of you might be down around 5.5, I would think. I think right now, you could maybe argue for 6.25. Anything higher than that, and I'd be concerned that we're seeing it a little too rosy. Anything below 5, and I'd think, oof, I think you're letting negative bias enter the analysis, because when we're as objective as we can be with each of these components, it leads us to a certain place. So, okay, so that's where I am. Sector rotation, very strong still. Money is flowing well in all growth sectors. We have opportunities developing in tech. We have concerns in tech. We absolutely have concerns in tech. What are our concerns? Whoops, I don't need the calculator. I need the charts. The concerns are obviously Apple. Apple can go through these like heavy dip periods. Now, it did something very similar to this back here. and it was actually starting to move, and then it got hit by, this is when they like made some weird announcement about the Chinese government not letting people bring iPhones. It was just kind of weird, and it did just pervasively put a lingering weight. Other than that, you can see that what we have here looks very similar to what we have here, right? So Apple has tendencies like this, and for me, the thought process is not that I'm like, oh, let's buy this. My process is still, I need it to pop out of this and then the next one. So that is my trade there. I'm not trying to call this out down here. I'm waiting for this to break out, pull back, higher low. Yes, that's it. So this trade I did catch, and then nothing else came. This is what we're looking for. Let's be convinced that the sellers are done, that the buyers have regained some control. It's that reversal process there where we first break the consolidation, it's established. Then we wait. Why that slanted line there? You can see earlier I would have actually drawn it here, but we accelerated. The consolidation accelerated. What's interesting is prior, this one was going down pretty fast, and then it decelerated before it broke, right? So those lines of consolidation, oh, not connected at the bottom. I mean, I'm not going to put it at today yet. I need to give it a little bit of room for upswing before. So I'm just sort of measuring it. I mean, you could certainly draw it straight against this if you, whoops, I missed it that time, but it's not going to change very much. I still need it to recover back up into this area before I'm convinced of anything. If it just gives a couple of days of flag, that's continuing to drop for me. Okay, so what does this mean? Well, at least it's found support. That's what it means, but we still have a good ways to go. If you look at our other core stock in technology, it's also a little lackluster right now. Microsoft isn't doing much, right? So part of the reason that the NASDAQ has paused is two of the, I mean, let's really break it down. When you look at the NASDAQ, which is the 100 biggest tech companies, Microsoft is 10% and Apple is 11. So 21% of the NASDAQ comes from these two stocks. Hugely influential. It doesn't shrink much even when you go to the S&P. The S&P, Microsoft is 7 and Apple is 5. 12% of the S&P, 12% of a 500 stock index are these two companies. So it's not that we're like, oh, we just love them so much. It's that they are hugely instrumental in projecting what the market is doing. So little sideways on Microsoft, trying to regain some confidence in Apple. But we do have strength in the semiconductors and in software segments. So a lot of times people are like, oh, the big seven, the big seven. Well, two of the big seven aren't doing very well, but a lot of tech still is. That's what I'm saying is the breadth of this market is what helps to provide confidence to our watch list and to what we're seeing for market strength. Okay. Let's get to the watch list here. So we've looked at futures, we've looked at news, we've looked at, let me finish the market posture. We didn't talk about the VIX, and we're going to look at the VIX. The last thing, the VIX did drop for me. What dropped the VIX? I had a higher low, which actually did trigger a half a hedge. Why was it only a half a hedge? Because I had a time spread at the time that actually was delta negative. So and I had minimal bullish trades. So if I don't have very much delta, if you're not sure what I mean, you're going to love the options class and the Greeks class. But delta is if I'm wanting the market to go up or down. If I'm delta positive, that means I have calls or bull call spreads, things like that. If I'm delta negative, that means I have things like puts or bear call spreads, things shorts, things like that. So if you're delta positive, certainly then your risk exists if the market drops. And I had and the counter spreads worked out great. We're certainly going to look to do more of those. What's happening now? So this would not be a lower high, because if I go by the bodies, you can see it did slightly escalate still. The thing for me that's holding up for the VIX is this line has held so very well. I made the decision not to over correct with a hedge. That's part of why I only did half without this breaking, sitting around 14. So it never really got there. Yeah. Should be dropping because of the Stoke. Ooh, careful, because it's actually the opposite. The Stoke will be dropping because of the it's not price action. This is just an index. But yes, we did get overbought here, and there is a high degree of connection. But remember that this can go sideways like this while this drops, and it could just turn without it going all the way down. It could go all the way down. So be careful using this as your predictor. Remember, for me, that's the last 5% of my analysis is down here on the oscillators. It's interesting because it's dropping, but it's actually for the day, but it's actually up for the day. This is where we closed on Friday. This is where we are now. So it's actually up for the day, even though it is a red candle, because we were lower than that Friday at close. It does look like it's hitting this and coming down. But like I said, this is actually two things that are happening. Number one, we have setups developing. Number two, this is an important one, because if this happens again, it's not a half a hedge. It's a full hedge for me, no matter what. If we come down and we do not get to that old low, and then this turns back up, doesn't matter where this is. It could be here. It could be down here. Doesn't matter. If the price creates a higher low, it's automatic a hedge. Automatic. It's not there's no thinking about it for me. If you want to think about it, think about it. I'm going to just automatically throw on 5 weeks out in time, 5% out of the money, put on the SPY like clockwork. Like clockwork. And the concern is when the VIX really escalates, it escalates. It does so in a broadening formation. So our concern is that the next time we're shooting up here into 18 to 20 territory. And yeah, you'll be glad you got something on in advance of that. So this is something we're watching for very, very carefully. Absolutely. Okay, watch list. Apple getting some recovery. We love to see that. Look at that now, up 1%. Apple gaining strength only adds to the other trades that we're thinking about. Aflac. Now, here's the thing about Aflac. Would I take a trade on it still? I would say yes. But be careful, because we did have a lower high. The moving average is still up, but if this goes up, pulls back, and doesn't break the 50, it's viable for me still. It's viable. If it comes all the way back down here, at that point, I'm thinking this looks almost like a Head and Shoulders setup, and that's the neckline, right? So be careful as we watch this develop. AIG looks quite strong. I have no problem with this. There's a trade that exists anywhere in here, but it's not there now, right? It's not there now. AMD was anticipatory Thursday, confirmed on Friday. Now we're a little behind it, right? This was one I liked and took. If you look at the Heikin Ashi, It's now giving us this, which means if you did, people are like, well, am I too late? The too late question for me is answered by the Heikin Ashi. That's the last candle I'm willing to trade in on, right? Because if you took that trade, would you be okay? Yeah, you're not too worried that you missed this. I can take that. I can put my stop a little closer and then ride up all four, try to look for this and go. Did you miss this? Well, here, that would have been a little harder. That was around earnings, but for me, still viable. It's just a matter of how you adjust your trade for reward and risk based on profit targets and stop loss levels. Looks great, though. We said chips look great, right? We said that. Amazon. Okay. We're going to have to make a decision if we think if this is it, right? If this is going to be a bullish run and the market's going to make its next run, we have another one that's bouncing right at, I'm going to say it held the 50. It's a little below on this day. The next day it closed right at it. And now we're bouncing off of it. If this stays like this, that's viable, right? Amazon, consumer discretionary, viable. AXP, not yet. Boeing obviously just got punched in the mouth. We got to figure out what happens next. BK, I don't like that one. And you can see with financials, we're going to see some signals potentially, but a lot of things are reporting earnings coming up this Friday. And then Alcoa, this is like my open the door for earnings season is Alcoa. Alcoa is the Wednesday of next week, the 17th. Anything that's earlier, typically right now, the financial stocks have kind of pushed themselves to the front of the line for earnings. And so you're going to see a lot of these reporting earnings on the 12th. So you don't have a lot of time unless you decide you're going to carry through earnings. I'm not. BLDR, viable. Was viable Friday, still viable today. That's industrials. So industrials looks pretty good. Some technology looks pretty good. BlackRock, it's at support. If it increases in strength during the day, that would be viable. You can see it's starting to turn down here. You don't have a lot of time. Could I get in for 3 days, 4 days? Sure. Most definitely. BX, same kind of a thing. It's close. This one has a little bit more time, but you don't have a signal yet. So this could be where the financials, if they go, give us confirmation tomorrow. We don't need. In fact, that's one of the things I like about the quality of this market is the windows are a little wider. Sometimes literally you have one day to get trades on across the board. And if you miss that day, that's it. I like where I can get a couple on and then all of a sudden a couple more signals and it's a little spread out. It's almost like they're confirming each other. Citigroup, it's starting to consolidate. The question is there time? I don't think so. Another one on the 12th, and this is early, so you really only have this is before market, so you really only have till the 11th. So you only have a few more days. I just don't think it's going to get there. Caterpillar, it gave a signal on the price, but not the stochastics. The stochastics is actually giving a signal now. Something like this, I might decide actually to wait for the Heikin Ashi to give me the green candle, the white candle, and then say, okay, now the momentum is, remember that they're momentum candles. I love the Heikin Ashi for momentum. It just doesn't quite have, almost came. Yeah, great. Wait for it. That's fantastic empirical confirmation. Capital One. So it's a little more iffy in the financials. You'll notice that's the one place where we're like, not seeing it. Here's ConocoPhillips. Took it, thought I was great, gave it all back, got caught out before the drop. Okay, sometimes you eat the bear, and sometimes the bear eats you. Costco, viable. Costco is not really in the consumer discretionary space. It really sits a little bit more in the consumer staples. But we did see a little bit of strength in the staples. So this one is definitely a viable and very strong company. CrowdStrike was on Friday as well. And now what? Now you're in continuation trade rather than bounce. There's your Heiken Ashi. This is the last chance if you're going to do it. You would have the ability to set a tighter stop, and then know that you're going to adjust your stop kind of daily as it progresses forward from here. But this looks good. Software. CSX still in consolidation. Railroads out of industrials. Okay, let's just be patient. The sellers have the floor. How are they doing? Terribly, right? The buyers have clearly taken a break, and the sellers still have barely got it to the bottom of this candle. That's where they are after the sellers, the buyers are, taking a quick shower, getting some Gatorade, maybe even eating a meal. They're just resting. It's getting ready to come back in. Delta continuing to move. No impact from the Boeing fiasco, up 2%. DHI looks viable if you like the home builders. The Dow is down 0.5%. Does this look bearish? No, looks super bullish still to me. EMBX, viable but not moving. The concern with this one was the fact that it took a while and it got below the 50. So if you took this one or take this one and it can't get above this, you can see this 13 level. Remember when we talk about resistance and we use terms like recency and frequency, the top of this candle before the gap touched it here, touched it here. So right there, that's gonna have an impact. If it can't get through it and starts to bounce, okay, it made a try and it failed. Done, out. Fastenal setting up. The stochastics is turning. It's a bit of a red candle. I might decide if something like if it gets back above 62.30, where it reverts back up and gets above this high and Friday's 62.27. So yeah, 62.30. I want to make sure the buyers convince me that they're coming in. GE. It's a funny thing because someone always is like, "Oh, you don't have GE on your list," and I'm like, "Yeah, because I'm the curse of GE." And I said, "I'll put it on my list." I literally put it on the list Friday, and you can see what happened. I told you I don't trade GE because every time I start watching it's almost guaranteed it's going to start going the other way. It's uncanny. Gold. Gold is setting up. If you're same thing, I watch gold, but I don't tend to trade it recently. I don't like how it moves. Maybe if I understood gold better, but I do like to watch it just as a corollary to the markets. It's been bullish. Its trend, I think, is pretty well mapped, and we're coming to the bottom of that trend. Stochastic setting up. So there you go. Wouldn't I go to a lower time when fast? I'm not sure the question, Michael. Lower time frame meaning like intraday charts. And tell me what you're looking for to do so. Google. Would I go to lower to check for like an intraday signal, like you're saying day trading, or do you mean to confirm a signal? You could certainly go confirm. You could go look at hourlies. Google is set up. I love Google a little bit more, or certainly could be an anticipatory trade at this point. I did take Facebook already on Friday, but I'm willing to trade them both at the same time because they both did phenomenally well, and I traded them both last time. So this looks like it could just be a day behind. Home Depot looks great. Said it looked good on Friday. It continues to look good today. Heiken Ashi giving you what you need to jump, maybe place a stop. Now here's the deal. A few people's market scores have dropped some, so they are bullish but a little more cautious. So what does that mean? That means instead of putting on 7 or 8 trades, they might put on 4 or 5 trades, or if instead of putting on 4 or 5, they might only put on 3 or 4. So your posture and these other elements that say, hey, I'm a little bit cautious because of this. Now for me, I'm still feeling pretty bullish. I know that if things start to deteriorate quickly, I'm going to have a hedge. That hedge is going to give me a little bit of cushion to make sure I clean everything up. I know that I'm looking for certain things that might indicate that this move is short-lived. So great, I'm going to move forward with it. But that's one of the things we have to think about. We're getting signals across the board. So how many and where? Right? How many in technology? How many in industrials? How many trades are you willing to take? Where are you willing to put them to make sure that we do? I mean, we can't really diversify market risk. If the market hits, most things are going to get hit, but we can spread it out to make sure that we attain the moves that we're expecting. Okay, let me get out of this and back to the standard charts. Yeah, Home Depot looks good. GM is my nemesis and I keep playing it. Why, Michael? I'm telling you, it's a funny thing that we develop. I have stocks like that, and I'll be like, all right, I'll relent and I'll trade it, and then it goes bad again, and I'm like, what the hell, man? Yeah, I get it. I get it. Home Depot looks viable. IBM does not. ICE. I told you guys. This thing signals fast. Oh, I was thinking that on Friday. I was like, this thing can turn so fast, and I didn't take it. And now it's up here. And the same thing, right? It happened back here, and I'm like, gosh, that's a big, I don't know about this. And then I don't do it. And same thing here. And then it gets, I don't know. I think this is viable. I hate when I see things and then I don't pull the trigger. What's the low here? Low is 125. I could go 125.75. I mean, it's 2.25 for risk. Can I get 5 at least from it? 132 is up here, which is about like this move. I could get 2 with this move, 3 with this move. I don't know. I think that's viable. I think that's the best looking thing in financials. What are your guys' thoughts? I mean, that's real nice. Oh, we should have pulled the trigger on Friday though. We looked at it. We talked about it. We said it. We said this thing signals quickly. Bam, it goes. Interesting, right? Intel looks viable. So both Intel and Microsoft, or not, sorry, Intel and AMD those are our two favorite chips. IWM, I'd take it. Not yet. It's a little anticipatory. And if I'm putting on a number of trades in other areas, I don't need an anticipatory. I'll wait for confirmation. But I do like this, and I have been trading small caps, and I think a few of you others have as well. JP Morgan pulling back. Probably not time before earnings. KKR trying to move a little bit. We'll see. Meta, the Meta looks great. Took Meta on the anticipation because I loved how it looked, looking good. It's a doji, but it still is going to give good Heiken Ashi. Although questionable if we consider that the second candle or not. I don't know. If you haven't done it, I'd say you're probably better off just watching Google. Microsoft at least showing some strength, but it's got to break that consolidation. Netflix for me was the weakest of communication services, so it was not really on the table. Oh, geez, look at that. I called out. I said, I don't like NVIDIA as much as Intel and AMD. I don't like it as much. I think they're stronger. But NVIDIA, it was more sideways. Great. Put this on the list of candidates for the next time it pulls back. But having the strength of NVIDIA is certainly going to help continue to provide momentum for AMD and Intel. Picard setting up, not quite there yet, but right on the knocking on the door. PNC a little bit unstable. QQQ. The Qs look pretty good today, right? I mean, for me, they look pretty good. That looks buyable. If someone was just like, hey, would you trade this? I'd be like, yeah, I'll definitely take a trade on that. RCL, SMCI. That was one that signaled Thursday and Friday of last week, continuing to show some strength. Software. Snap signaled last week, continuing to show some strength. Here's the SPY. We're now up 0.35%. We're getting a turn on our stochastics. This is looking good for us. Basic materials, steel. I'm taking steel off the list. I did catch one good trade on still, but at this point, it's looking a little bit more iffy. UBS, another one from financials that has some strength, although I think their projections for interest rates are pie in the sky. UNP. So we have CSX and UNP from railroads. CSX hasn't really started yet. This one has consolidated. Now it's got to stop. If this thing just keeps dropping, I'm a little less inclined. I would love to see this thing stabilize somewhere between 235 and where we are now, and then give us some price the other way, and we have action. The VIX has come down more, but again, it's still slightly up for the day. So it's still in kind of a funky place. If we get a couple of more days of good market action, but the VIX doesn't drop, that's concerning to me. That's the institutions just for whatever reason holding on to some hedges like they're trying to make a move. That's what we're looking for this week. We're going to keep our eye on that most definitely. Wells Fargo, giving some back. Don't love that. I have a piece of that. Okay, we'll see what happens. You can see it's across the board. The one of the 5 sectors that really is just kind of a little bit more lackluster is definitely financials. Walmart out of consumer discretionary setting up again. I'm certainly interested. I've been watching that. There's my consolidation. We've broken out of it. And this is now the first good consolidation into a higher low. That's what I'm watching for. Real quickly, the sectors, biotech still setting up, still opportunity. And for me, I would probably still trade the ETF if I took one. Materials, okay. Communication services, trying to turn, looks good. Energy, getting hurt. Okay, that's very useful for inflationary purposes. Financials, like we said, is just kind of meandering along. Industrials is, well, it's down a little today, but trying to set up. Technology is looking real strong. We know how well technology can lead. Technology is a market leader. If technology starts showing more strength, it's very easy for everybody else to follow suit. So that's very bullish. They're staples. Okay. Real quickly, can I take a look at pins? Of course. Pinterest, love it. Beautiful. Where are we at? Consumer, I would consider this consumer discretionary. Is that, let me see where fundamentals on pins. Let me see. It's gotta be, right? No, they put it as communication services, but it really feels more like consumer discretionary. Both are strong. Trend is good. New high, pull back, higher low, bouncing. Come on, press. That's perfect, right? That's exactly what we're looking for. This might even give you a Heikin-Ashi. Boom. That gives you liberty to not. You could always put your stop below the previous lows, or you could basically say when the Heikin-Ashi shows up, boom, that candle there, you believe that the momentum has started. So instead of putting my stop under it, I put it under here, and that gives me a tighter stop. Tighter stop gives us a better reward to risk. That's all we're thinking about with something like that. It's not that we're like, it's so much more likely to go right. It's that we can make more money when it does because of it giving us the ability to set a tighter stop. Absolutely love it. Nice, nice call out. How are the options? Volume looks pretty good. I mean, it's, 10 million shares a day. I would think that the options are pretty liquid. So, okay. Love that. Trading plan. This week we are working on market forecasting. In the email and in the emails this week, I'm putting in quite a few links. I'm giving you the trading plan link that has a video that references what we're doing with this part of the trading plan. And if you're just really trying to dial in your market posture, there is a video for each component. And I put the links for each of those into the email. So you can go back and watch. They're not long. I think they're just like, I don't know, 12 to 15 minutes on each of these components. So if you just want to like review what we're doing with it and how we're scoring it and why, you can go ahead and take a look at that. But let's get this defined. How are you analyzing the market? How are you distinguishing between your market posture, which is your overall, and your trading posture, which is what are you doing today? How are you reconciling the implications? Meaning, what types of trades are you taking? How long do you expect those to last? How are you adjusting risk by number of trades and risk per trade? What kind of strategies or systems are you implementing? And what kind of tactics are you taking profits earlier or later? Are you taking a quarter to a third or a third to a half? I mean, these are the things that I don't want to have to decide every time I have a trade. I want them decided overarchingly. Is that a word? I don't know. But that's the umbrella that helps to dictate these. Then I make the trades. Obviously, we're also looking at hedging. Okay. Good stuff today. Took a little bit extra, like I tend to. I know I ramble on sometimes. Let me know if you have any questions, comments, or concerns. Tomorrow night, we continue with the Trading Foundations 2.0. I think we're jumping right into technical analysis, which obviously I love technical analysis. I'm a technician. I'm a price action technician. I absolutely want to understand supply and demand based on what I see from price forces. Will we see Gary again? Yes, we will see Gary again. I'm not sure when yet, but Gary is going to have an increasing role as we go further. So, all right. Well, thanks everybody. It's good to see you. Oh, the weather's looking better now. It's clear, sunny. I'm feeling a little better about my son making that drive. I think I found the right window. I hope you guys have a great rest of your day. I will see you tomorrow evening. And as always, happy trading.